Hey, what's up, everyone? Morning, morning, morning. Hope you're all doing well. And today it is, what is it? Today it is Tuesday, January 23rd. So we're starting off the week on another fun note here as the markets hit a new all-time high yesterday on the regular trading hour session before pulling back slightly and sustaining some of the areas that we were looking at, right? Major Wall Street indices have notched new record highs with gains, lifting the blue chip Dow Jones Industrial Average above 38,000 for the first time ever. We might have to get those Dow 40,000 hats, while the S&P 500 ended at an all-time high for the second day in a row. The intraday high was on the futures was, I think it was 48.97.8, something like that. Don't quote me on it, but there's a few investors and traders alike, such as investing group leader Victor Durganov, who expects an uptrend to continue and predicting that the S&P could reach around 52 to 5,500 and the Nasdaq 18 to 20,000 before the year end. While Federal Reserves do take a backseat as it enters the blackout period, because we have our first meeting of 2024 on this coming Wednesday. So the earnings will dominate headlines realistically with Netflix and Tesla coming out this week. Netflix is actually coming out today after the bell. Tesla, I believe, tomorrow. And I do like the potential for continued highs, right? I do like the market pulling up a little higher. I don't think we've seen necessary highs for the year, but to continue this trend for the entirety of the year, I think that's a little bit overdone. And I think there could be some rocky times ahead after we pass the first quarter. Right, that's just my general opinion. We'll see how these things pass up, but I have no issue with this thing continuing higher. Right, I still have some long swings from last year, and I like how this thing is propelling. But we'll talk about some key levels and the comparison between the S&P and the Nasdaq for this week at least. Seeing what we can make of this. So. We also have some other news, right? Remember the hack on the SEC's X account or Twitter account earlier in January? The one that said that the agency had approved the spot Bitcoin ETF before that they did, triggering a brief spike in Bitcoin's price. Well, it turns out that the hacker obtained control of the staffer's phone number in a SIM swap attack, allowing the fake post to be published on the platform formerly called Twitter, now X. And the SEC also noted that the multi-factor authentication of its X account was disabled last July, but re-enabled after it was compromised. So the regulator subsequently green-lit 11 spot Bitcoin ETFs on the day following the attack, allowing them to start trading on the U.S. exchange. Now, I haven't really kept up with them. Realistically, I don't really know how they're doing, but all in all, Bitcoin has been, I think, pulling back slightly, if I'm not mistaken here. BTC, USD. Not really too much to talk about. I'll talk about one more thing. The U.S. and U.K. military forces, we'll talk a bit about Yemen, with support for their 4 other countries, have conducted a fresh round of strikes in Yemen, right, targeting 8 Houthi sites in response to the militant group's growing attacks on vessels traveling through the Red Sea. And remember, the disruption to global shipping are already more damaging to the supply chain than the earlier COVID-19 pandemic, according to maritime advisor firm Sea Intelligence, which could affect energy markets and product tanker rates. So the longer the transit around the Cape of Good Hope is also having a significant impact on vessels available to pick up containers. But unlike during the pandemic, there is excess vessel capacity now unused that could be put back into service. So you can see Bitcoin, right? Last week at some point, I think we hit about like 48,000. It's down about 10K from there. A significant drop from that, and it's pulling back pretty eagerly. I know a lot of people are looking at this thinking it's time for that bull market run, but it seems like we have one more pullback before that could transpire. Now, talking about stocks, right? Individual equity names. Let me see, sir. Where is this? I think that a lot of people are getting euphoric, but not excessively euphoric that they're kind of just blindly piling into this. I think that as the market continues going up, right, a lot of big money has been most recently piling into what we have on this equity market right now. But these late ads are propelling prices to go a little further higher. Now, there's not that many people, I don't think, that have been aggressively, continuously shorting this market as we have been rallying. And right now, as I see this, there is 1 to 2 more spikes before we start entering a period of actual seasonality that can come around after the first or even second quarter. So a lot of people disagreed with me that we'd pull back in the markets this aggressively, but I think that this year is due for some kind of maybe 15-20% pullback in the overall market at some point from the highs that we print probably in March before we start pulling down. We're coming at a peak area where I could see that prices can start kind of holding out to the upside. There could be a little more higher, but I'm looking for some hedges for this downside momentum move that could happen over the next few weeks as we enter more into the earnings season before we do get a spike from later tech earnings that may come that could rally us into a new all-time high on the SPY, maybe tagging around that 490 area, 495 area before pulling back. Now, I'm not getting super euphoric, meaning that I'm not looking to buy all these stocks, especially tech stocks, into these highs, as I think we're getting very overdone here. I think there was a time to buy them, and a lot of people, they're going to be looking at this on the next maybe 5% to the upside and thinking, holy shit, now's my time. I missed that massive pullback when the SPY was down at 410. Let me buy it at 490. And every individual name that has rallied hundreds and hundreds of percent since the start of that pullback. Generally speaking, right, stocks and equities have 1 to 2 opportunities to get long throughout the year for the longer term. And I don't necessarily think it's going to be at an all-time high realistically. So I think there is more upside. Don't get me wrong. I know a lot of people are like, holy shit, how could you possibly be bearish in this? You think the market's going to crash? Well, no, that's not what I'm saying at all. What I'm saying is that I think there is more upside realistically, but I think a larger pullback is going to transpire when money starts flowing out of tech, considering it a little more overvalued. Whether that happens in the first quarter or the second quarter, I don't know, but I think that we're peaking into a period where these quarters don't have too much upside left in them, right? So we'll see how this does transpire. I do like a peak in March before we start pulling down a little more, but I think a decent pullback in tech can kind of transpire this year before anything else occurs. Now, like I said, it's very difficult to fade all-time highs, and it's very difficult to be bearish at all-time highs continuously, so that's not something that I'd want to do. Rather, I want to be a little more I guess, bearish or flip the script to look for some of the downside when we start actually accepting into distributions lower and lower. Now, what I want to compare is the S&P 500 futures and the NASDAQ futures to begin, because there is a slight discourse here. They generally have a very positive correlation. They still do, right? But I can see that NASDAQ is trying to pull a little lower than the S&P to begin its kind of pullback move here. The S&P is still holding out pretty well. And a few levels that you have to watch today. Yesterday, a lot of people piled in, stuck long at 48.90 on the S&P 500 futures. So that's the first barrier. And then at 48.96 or so, there was a massive seller. So those two areas you got to watch out. Are they going to be resistance? We'll see, right? If buyers just open this up off the open, that's fine. But the real sellers, they're going to start opening up under 48.73. 374 on the S&P 500 futures. That can open the floodgates a little lower to the downside. So there are a few levels that you have to watch for if you want to be really, or if you want to be more bearish and you want to feel better about it. I'd suggest waiting to see if this low 70 actually cracks rather than trying to sell every single high that we run into. Now, if we compare this to the NASDAQ futures, the NASDAQ futures here, it'd be great if this wants to load properly. NASDAQ futures, as you can see, they're pulling slightly lower highs here over the past few sessions. Sorry, it's not responding to me. They're pulling lower highs over the past few sessions here. So the way that I like to see this is If we start holding around like 17,510 on NASDAQ as resistance and we're accepting into the value area that was created on the overnight session, we could probably see that slump to the downside, especially under 17,440. That would accept lower and we could get a very significant push to the downside. You can see it's a lot weaker than the S&P 500 here, so I'm going to look for some weakness in the NASDAQ to start off the session. And with that being said, let's open up our live trading room for our futures members. If you want to come and check that out, see me trade live on a daily basis, check out TradeProAcademy.com. Good morning, everyone. Morning, guys. I hope you guys are ready. Second day of the week. Yesterday we had a good start. I traded every equity except for Dow Jones, I guess. So Russell, NASDAQ, and S&P yesterday. Pretty good stuff. I still like Russell to the long side. Russell has been beat up a little harder on this last dip, and it's getting picked up a lot more aggressively because I think money is starting to flow into these small caps. Not that I love small caps. I think that if we start actually pulling down a little more aggressively this year, as I'm looking for prices to do so, small caps are going to be the ones that get slapped around a little harder, I believe. So that's one thing to note. But starting the day off, I can't help but be a little more on the bear side of some of these assets, mainly tech